Hey, my name's James Tuxton. Welcome to my YouTube channel. Now, in this video, we're going to talk about where are interest rates likely to end up by the end of 2023. What can we do about it? How can we protect ourselves? And when do we think interest rates are going to come down? We've got all of that covered in this video and some more stuff as well. So while you're here, we've got new content every single day. Make sure you subscribe to the channel, hit the bell notification so you get notified of all our new content. Smash that like button, guys. If you're subscribed or not, smash that like button right now. That helps me with the YouTube algorithm. So give me some more views, please. So interest rates, where are they going to go? Well, firstly, what is going on? Well, we've got inflation and it's been really sticky. I don't know if you follow the inflation in other countries, but they're dealing with it much better than we are. And that could be down to various different reasons. We don't need to get too political on that. It is what it is. But the fact is, America is at 4% inflation and some of the EU is at 5% inflation, whereas the UK is still at 8.7%. Now, how you deal with inflation is that you raise interest rates higher than the inflation amount, meaning we would need to go to 9% plus in order to crush the inflation. That's what you do in normal times of inflation. However, this is slightly different. So you'll see inflation in lots of African countries quite often, and it's out of control. People are just putting the prices up on a daily basis, trying to keep up with what's going on. And they really need to curb that inflation for that to be dealt with. And that's consumer side inflation. This is supply side, meaning it's out of our control. We, as the normal people on the street, we can't do nothing to really help ourselves here because we don't control the gas and electric prices. And it's really the gas and electric prices and the quantitative easing that the banks did in the pandemic that have caused this record long period of inflation. And so what they're doing is raising the interest rates. They've done it 13 times now. We went from pretty much 0% interest and now we're sitting at 5% as the base rate. So that is where we're sitting at today. And now I'm recording this, it's June. You're going to be watching this in July probably. And so that's where we're sitting. We're sitting at a 5% base rate. That's pretty crazy. And the ones that get really hit hard by that, and I know there's not loads of sympathy here, but it's landlords, because we have something called interest-only mortgages. So our payments could have gone up 5 or 6 times for some people, or at least tripled for a lot of people. And that's going to cause big problems. It's going to be passed on to renters. That's why rents are rising. That's why landlords are leaving the market. So there's less supply. And that means the demand is going to go through the roof and it's really difficult to deal with. So what can you do to protect yourself from this? Well, I've mentioned this on a few videos and I'm really loving that I'm seeing comments that some of you didn't know this and you've taken action and it's helped you out. And that's to go to your bank now and try and fix a new deal. And so you can do that. My partner, Katie, we've got a property and it's her mortgage. And so that runs out in December this year. Now, she was going to wait to December, but we said, let's have a look in the mortgage app. She has an app with NatWest, but you can do this online. And she has options on new deals. Now, the base rate was at 5%, but she was able to secure a 5-year fixed for 4.9%, which is not what we would have wanted a few months back. But given today's scenario, we're pretty happy with that. And so you can do the same. You can go to your bank, you can fix a deal at today's rates, and then that will give you some security. You still keep your old rate until your deal expires, so you're not losing that, but you can fix a deal at today's rate, giving you that certainty on what it's going to be. That's one thing that you can do. So you can apply for a new deal early. Where are mortgage rates likely to end up? Well, the markets, they really understand what's going on. They price in what they feel it's going to end up at, and they're feeling that it's going to end up at 6% as a base rate, which is a hell of a lot more even from where we are right now. It's going to be a shock to a lot of people, and that's why you need to help tell your friends and family, have you sorted your mortgage yet? Have you done that? Because Why are you going to wait till it gets to 6%? Because then you're going to pay 7 or 8% on your mortgage. Whereas at 5, you might get a deal at 5.5%. I mentored some people yesterday and they actually, a lot of them fixed at 5.5, not quite the 4.9 that we were offered, but 5.5%. Still pretty good in today's market. It's not ideal. You'd rather it wasn't at that, but fix the deal now. So let people know what's going on. Tell them interest rates are going to continue to rise. The Bank of England have said this to us. It's no secret. What else can you do? Well, Jeremy Hunt has met with the major banking leaders in the UK, and 85% of banks have agreed that you can switch your payments to interest only. So let's talk about that. Let's just say you pay £1,000 a month. And this will vary depending how far you are through your mortgage. So the earlier your mortgage is, you'll have more interest because interest is front loaded in mortgages. But everyone's different. So let's just give you a roundabout example. Let's just say you pay £1,000 a month and 500 of that is interest to your bank. And 500 is repaying the balance, right? So that's making your debt go down. Now, what you can do as a temporary fix for 6 months is stop paying off the balance. And I don't think that's a bad thing, because you can then pay just £500 and you can keep that extra £500 in a savings account. I'm not saying go and spend it and go to Barbados. I'm saying save it. Make sure you build a little kitty, a pot of cash up that you can use for other stuff. And if you then chose at the end of that, you said, you know what? It was great to save that, but I've already got other savings. I'm already doing okay in my job. Then you could just pay it back off the balance. There's nothing stopping you doing that. I believe that deal is going to get extended. You see, when we had the pandemic, we had things called bounce back loans that launched. They were for a short period of time that got extended again and again and again. It lasted for around 1 year. You may recall people had the furlough scheme, and the furlough scheme meant that you could stop working, still get paid, and that got extended again and again and again, which was really good for a lot of businesses and stopped mass redundancies. I think this is a trial for 6 months. They're going to look at what it does to the market. Does it protect the market? Does it stop it crashing? Does it help people? That's really, really important. And I'm very confident that at 6 months, or probably around 4 or 5 months into it, they'll say that it's extended for another 6 months. And I think it will go for at least 1 year. So potentially, if this was your scenario, if you say 500 quid per month, that could get you £6,000 into a savings account that will give you that little bit of protection. And that's a good thing. And so that's why I want you to share this. Maybe share this video with some people that you know and get them to watch it so they fully understand what options they have, because it's important that people have this opportunity to do that. So first off, you can fix your mortgage early. Do that. That's very important. Then switch to interest only. It's no downside to that, because if you keep that money in a separate account, if you want to just pay it off your balance, you can do that. But at least give yourself the chance to save it and have that just in case you need it. That's very, very important here. So interest rates are going to keep rising. They're going to hit 6% for sure. That's where the market's going. And I think then we're going to peak out at 6%. I just see that that's where it's going to stay for a little while. I think they'll stay there for at least 6 months, maybe start dropping to 5. I don't think you're going to see the market in a year or 2 years be down at like 0.25% interest rates again. It's just not going to happen, guys. This stuff is slow moving. It takes time. And that's how life is, unfortunately, at the moment. The market has really changed. The government's done a bad job with inflation, and we're paying for it, ultimately. Let me know your thoughts in the comments. Keep it kind. And if you want to learn property investing, now's a great time. Houses are on discount. There are some great deals to get out there, and you need to learn the right strategies, because buy-to-let's really tough. So let's learn the right strategies at the moment, which are HMOs, conversions, refurbishments, serviced accommodation and stuff like that. And you can do all of that by joining my Property Accelerator. I'm going to put a link that's pinned at the top. Give it a whirl. It's £1 to try it for 7 days. And then you can learn some great stuff from me, and let's take your property business forward. Do check out all the other content on my channel, including this one right here.